One of the biggest objections we have faced with a lot of Kenyans against taking insurance in general is, I have an emergency fund. First of all, if you have an emergency fund, I would like to say congratulations. But is this emergency fund adequate when life happens? Think about it this way. When you have a medical emergency or someone has passed away and something major has happened, like your house has burnt down, do you believe that the emergency fund, the money that you have put in your money market fund or in your bank account to take care of unforeseen circumstances will be enough? In this video today, we're going to talk about what is the role of the emergency fund and where does it stop, right? Where does insurance actually come in and takes over? Because it's important to see how it is that they work together and what is the difference. If you have not subscribed to our YouTube channel, right now is the time. And as a free gift from us at Risque Africa, your protection hub, we have a free ebook. Please check out the link in the description box below for the 5 protection tools that you need as a Kenyan today. And also, please fill in the quiz on your protection plan. We know that what is the gaps that you may face and how exactly it is that you can fill in the gap. But what is an emergency fund? An emergency fund is a stash of cash you put aside for life unexpected circumstances. This is the 3 months to 6 months worth of your monthly expenses that you put aside, whether it's in your bank account or in a money market fund, so that when life happens, for example, you have a leaking roof, or you are required to go up country urgently, or you are to even lose your job, you have enough money to take care of that issue without having to dip into your investments or without it disrupting your life. Usually, the rule of thumb when it comes to setting up an emergency fund, if you're single, 3 to 6 months is a good place to start. This money you put aside, and you have to make sure that this money is liquid because access is critical. Access is important. But if you're someone who has kids, it's good to have 6 to 12 months worth of these monthly expenses so that if life was to happen, if tomorrow you're to lose your job, you do not have to run around wondering where exactly the money is going to come from to pay your bills in the house. Yeah, because it doesn't matter. Even if you've lost your job, you still have to pay the bills in the house. You still have to pay your children's school fees. So it's important to put this cash aside. But the one thing you have to remember is emergency fund is for short-term expenses or unforeseen circumstances in the short run, right? And emergency funds cannot usually deal with very, very big emergencies like what you're going to go through in a bit. For example, a medical emergency. If today, think about it, you were to be admitted or a loved one was to get admitted, and what is required is, say, about 3 million shillings. Even if you had an emergency fund, is that something you would want to remove from your pocket to take care of a hospital bill? And this is where insurance comes in. Because insurance was designed to take care of such big risks like this, that on a normal day, you'll not be having this money just lying around somewhere to take care of this risk. As I've given an example of a medical emergency, you don't know how it's going to happen, when it's going to happen, and to what extent. This is why it's important to have a medical cover, which is a financial tool for taking care of unforeseen medical expenses. At least it is going to cover for the hospital bills, it's going to cover your doctors, and you're not going to get into financial disruption in a major way in the case this was to happen. And an emergency fund would have been good for smaller medical treatments, like you have to go to a gynecologist or, you have a flu. That an emergency fund can take care of. But for something big, like someone is in the ICU, you will not be able to have enough to take care of that because you don't know how much the bill can go to. A day in the ICU could easily be 100,000 to 150,000. So how does this medical insurance work? Because we know a lot of us face the exact same risk of, falling sick. We're like, okay, right now, I do not have the capacity financially to take care of a big risk which could happen, that I might be needed to pay 3 million shillings, 5 million shillings. So what do I do instead? I share this risk with so many of us, because we're all facing the same risk. So I remove some money, my friend removes some money. We all put this money into a pot, which is now handled by the insurance company. If something was to happen, this money is going to be paid out to the person who is sick or whose family is sick. For me, who am not sick, I'll thank God that I'm not sick, but at the end of the day, I would rather set aside maybe that foreseen 50,000 or 100,000 every year compared to unforeseen 5 million shillings or 3 million shillings. So that is where your insurance comes in. And in this specific situation where medical insurance comes in, it will take care of you where an emergency fund does not have the ability to. I personally will feel the pain, even if I had 3 million shillings in my account, my money market fund, even if I had 3 million shillings worth of investments, it will not sit very well with me to use that to pay the hospital bill, right? So just let the emergency fund take care of the smaller risks and the risk that you can handle yourself, but let the insurer come in when it comes to the bigger risks where you on a personal level might not be able to, or you'll have to strain to take care of that risk. Picture this, a parent called Anna, who is about 30 years old and has a child who is 4 years. Anna is a very smart and a very sharp parent. And because of that, it means she has an emergency fund that she has put aside. And at this point, let's assume Anna's expenses, monthly expenses, is about 200,000 shillings per month. And because she listened to us, she put 12 months worth of the expenses, right? So 12 months worth of expenses in this case will be like about 2 million, 2.4 million. And Anna, say, unfortunately passes away when this child is 4 years. This child has to go to school. She needs a roof over her head. This child needs to have the expenses taken care of, the bills like water, food, clothes. And this child has to go to school both now and in the future. Remember this, as a parent, we're meant to take care of our kids from the time they're born till the early 20s, at least until the time they're out of uni and they're stable. And in this case, if Anna has passed away at the age, with her child at the age of 4, how long will these 2.4 million shillings be able to take this child? If we're to put into consideration the time value of money, inflation, and all the costs that this child was going to have over the period of time, chances are the 2.4 million shillings might not be enough, especially if we're to regard the lifestyle that Anne already has and the child is already used to. Even if Anne has this 2.4 million shillings as her emergency, it will reach a point that this 2.4 shillings will be depleted and the child will be exposed. So even the dreams that she had for this child, the schools that she wanted this child to attend, it might not be possible. This is why it will be extremely critical as a parent, as Anna, to have a life insurance cover. Yes, an emergency fund can come through to a certain extent, a certain level. But the one thing we've also not put into consideration, which we're not going to talk about in this video today, is if she had put this money in her bank account or in a money market fund, this amount of money still has to go through the courts. So even if the child needed money today, it might take some time, maybe a year, 2 years, depending on the availability of the court and the complication that sometimes surrounds succession for this child to receive this money. But if she had a life cover, because a life cover is a financial tool that is meant to replace your income. It's meant to replace your economic value. Each and every one of us has an economic value. There's the amount of money we're supposed to make in a lifetime. But when life is cut short, it means that all the money you could have made in your lifetime cannot be made anymore, because you're the one who goes to work. You're the one maybe who's running this business, or you're doing this freelancing or consultancy. But now when you're not there, you cannot do it, and you cannot expect a 4-year-old child to go run your business, to go to replace you in work, And that is where life insurance comes in. It comes in to pay the bills, to take care of this child, to make sure, even if this child has lost a parent, the finances are not affected. So each and every responsible parent, Kenyan parent, has to have a life insurance cover because an emergency fund will not be enough. Another example, if, let's say, instead of now her passing away, Anne didn't die, but she got a breast cancer. What happens when you get a cancer? Yeah, from maybe the people you've known or the stories you've had, most probably you can no longer go to work because you have to focus on treatment. And cancer treatment is not cheap. Yeah. Most probably because now Anne can no longer go to work. She has no source of income. So income gone. And even if she had money in her emergency fund, this 2.4 million, it might not be enough. Because the last time we had a conversation with a client who was sick and had a cancer, for her to go to India, the first trip, she had to put aside 6 million shillings. So even if she has this emergency fund, it will not be able to take care of her in this instance that she has a cancer. Yes, she might have a medical insurance, but for medical insurance, the one thing you have to remember is it can only cover you to a certain limit. We've already done a video on medical insurance and sub-limits in medical insurance, which you're also going to link in the description box below to understand why medical insurance might not be enough. But in this situation, if Anna had a life insurance with living benefits, what are living benefits? These are now critical illness and accidental protection, meaning that because she's been diagnosed with a cancer, there's going to be a lump sum payout to be able to take care of this illness. And also that lump sum payout can be used to pay the bills so that Anna can focus on getting better. The one thing I truly believe is a lot of people pass away from these illnesses because of stress. Money stress. Now you are dependent on people contributing maybe through WhatsApp groups, well-wishers, and maybe if they've not raised the right amount for you to go out of the country, you have to be in the place now. You have to also actively ask them for your help. And you keep on, or someone keeps on deteriorating because the funds are not available. But the moment you have a life cover, which can take care in the case someone was to pass away, someone to get a critical illness or even accidental disability, the financial stress is taken away. So the emergency fund could help to a certain extent, but you see now where the life insurance comes in. Because a very good example, a client of ours who is the age of 30, a life insurance for about 10 million shillings, all she needs to pay is 8,000 per month. So you pay 8,000 per month knowing if you're to pass away or to get a critical illness, your family and yourself are taken care of. You don't even have to touch that 2.4 million in your emergency fund. The life insurance will come through. So even if you have an emergency fund, please also have a life cover. Also, even if you're single, because even if you're single, it does not mean that you cannot get a critical illness. That has nothing to do with a family. So it is important for you also to have it to make sure that you do not have to dip into your emergency fund savings or any type of savings or investment to take care of this situation. A lot of protectors have an emergency fund. Great place to start. But what is this thing, or what are the things that an insurance can do that an emergency fund cannot? What can make it that in as much as yes, you have an emergency fund, you and your family are still exposed? So let's go right into it. Point 1, an insurance gives instant liquidity for very big risks. In the case, say, someone was to pass away or has a medical risk, like they've gone and gotten admitted. Because in this situation we've spoken about, you only put aside a small amount of money, and in case someone was to pass away, someone was to get a critical illness, the insurer will release this money almost immediately to make sure that your day-to-day life is not interrupted no matter what. In the case of someone passing away, usually it takes about 7 to 10 working days for life insurance proceeds to be released and the family can continue moving forward with their lives with minimal interruptions. With medical insurance, it's immediate. If you get admitted, right, the insurer will give exact and immediate access for you to get a hospital bed and treatment as soon as you land in hospital. So that's number one. Number two, it protects your family, your loved ones from financial trauma. Because think about it, a parent, you are providing this income. You get a critical illness like a cancer or a stroke and you can no longer provide this income, or a parent dies. That means that all the money that you would have been able to give your family to pay the bills is no longer there. So in this situation, even if your family is going through a very traumatizing experience, at least they do not have to go through financial stress. They can deal with this inconvenience with a peace of mind, because there's nothing worse than going through an illness or a family member dying and there's money troubles. That creates so much inconvenience to the family and so much trauma because so many things are happening at the same time. I'm such a big believer of it's critical for people to go through grief in a peace of mind, for people to go through these tough times with a peace of mind. And what brings about this peace of mind? And it's having that money. Sadly, it does replace your income over time. Again, remember that you are a provider, you are a protector, you're the one bringing this income. And even if you had an emergency fund, the emergency fund will actually be depleted after a period of time because you've only put money to take care of you or your family for about 6 months or a year or 3 months, depending on the level of your emergency fund. But for something as critical as a death or a severe illness like a cancer or a stroke, we need to make sure that there's income over a period of time to continue paying the house bills, to continue paying for school fees. So when this amount of money is paid out through life insurance proceeds, this money can even be put in an investment like a bond or even the money market, and the income ends up being the interest ends up being the income that will save your family from, this interruption. Number 4, your children's dreams never have to be interrupted, or whatever it is that you've envisioned for your children, for them now and even in the future. When this insurance is available, it means that everything it is that you had envisioned for them, whether it's now their sports, their schools, a certain lifestyle does not have to come to an end. Yeah. An emergency fund does not have the capability to do that because life insurance and insurance in general is for long-term protection. An emergency fund is great for short-term protection. And also, lastly, insurance is really good when you think about multiplication of legacy. As I'd mentioned before in the example for Anna, as a 30-year-old, with 8,000, she can get a 10 million shilling cover. And with that, someone can put that money aside eventually to come in as an inheritance to the family. And that's where you can be able to multiply this legacy over a period of time. If there's one thing I need you to remember is this: emergency fund is for inconvenience and insurance in general is for minimal interruptions. Yeah. Emergency fund for inconvenience, insurance for interruptions. How can you use both your emergency fund and your insurance to build a proper protection strategy, a proper protection wall to just make sure that even when life happens, there's minimal interruptions, because they're both important. Yeah. Taking protection for short term is equally as important as taking protection in the long term, right? Because I want you to think about it this way: as emergency fund as the gate and your insurances as the wall. We're going to go deeper and just quickly and briefly over how exactly to build your protection wall to just make sure that you have a rock solid protection at whichever stage in life. Whether you're a parent, you're not a parent, you are an investor, you're not an investor, you just know that I have this protection plan with me, and no matter what happens, I know that I'm good to go. So first, very critical to have your emergency fund. As I said, 3 to 6 months if you're single and you're employed, because, we are assured of your salary every single month and it's a bit more predictable. But if you have kids and you are self-employed or consultant or an entrepreneur, it's very good to try build it to at least 12 months. So in those months where the money is not coming in as expected, you can still be able to survive. And as a parent, you know that your children's lives are going to be minimally interrupted. If you're to lose your job or there's going to be quite an emergency, like, a falling roof and you need to replace the whole roof. Yeah, you get the gist. Secondly, please have a medical cover, because yes, an emergency fund is a very good place to start, but you do not want to use your emergency fund, cash in your money market fund, to take care of a hospital bill, which you could easily have paid 50,000 as premium, 20,000 as premium, and you have access to all these doctors. Always think about it this way. As I'd mentioned earlier, I would rather put aside that 20,000, that 50,000, compared to an unforeseen 1 million, unforeseen 5 million. So, second, critical medical cover. Thirdly, life insurance. Because again, guys, life does happen. There's people who wished that they could see their children grow up, but life, sometimes does not go according to plan. So, critical to have a life cover to make sure that your income is replaced in the case of a death, a critical illness, as I said, a cancer, a stroke, a heart attack, or even an accidental disability, anything that could take away that ability of you to create that income. So important to make sure that this plan is put into place. Fourthly, part of the protection wall is your pension plan, because again, upon retirement, you do not want to bother your kids and you want some level of continuity of income, and that can only come in through your retirement planning. So pension is a very good place to start in retirement planning, through putting money aside every single month. So by the time you retire, whether it's at 65, 55, whatever age you choose to retire, you have access to income for the rest of your life until you exit this earth. And number 5, trust funds. So important, because it's good to have a place where you can start putting money aside and making sure for your kids, and making sure that nobody has access to that money except for the benefit of your child, right? So we have done videos before on how you can structure it in a way that in case you were to pass away, the money can be put in a trust fund for the benefit of your child. So instead of someone receiving the whole 10 million at a go, the whole 50 million at a go, it can be put in a trust fund, and the money to be now maybe sent directly to the school or the service provider, so that the person who is handling the money cannot misuse it. The emergency fund and the insurance are the perfect pair for protection. Emergency fund for short-term protection, and life insurance in general, both life, medical, critical illness, for long-term protection. So you need both. You cannot choose one without the other. Both are critical and both are so important in your protection journey. And what is this worst case scenario? Think about it. What happens if someone does not have insurance at all? And I'd like to pick our examples from what we currently see, maybe what you've seen and what I've also seen, especially now in our Kenyan context. Firstly, families are forced to have fundraisers. Think about it. Someone is critically sick in the hospital. At this point, maybe their emergency fund is depleted. What else is next? Yeah, someone will be forced to start a WhatsApp group or create a poster so that now they can start raising funds. And I think it can get so hectic because nobody knows, first of all, how long you're going to be in hospital for, or this loved one is going to be hospital for, and how much that hospital bill can be. I have been in WhatsApp groups. Someone is in hospital. We started raising the money. And then the money has been paid. We're told, okay, we need to raise more and more, because could be they are in the ICU. They've had to be there for a long time. And you all know how Kenyan hospitals work. If you have no money, you cannot get treatment. So having your family or yourself have to start fundraiser is a very big situation if you have no insurance. Secondly, grieving families are less exposed. As I'd mentioned earlier, there's nothing worse than you going through a very tough time, yeah, and you have no money. I've seen clients who have had a cancer and did not have the money to take care of that cancer. So the cancer, because it's affecting your body, first of all, you are grieving the fact that you used to be well and you're no longer well. Yeah. And also, if someone was to pass away, the family is now grieving the fact that their loved one is no longer there. And if there's no insurance, they'll be grieving twice, for their family member and for the lack of money. So insurance protects and ensures that whoever is going through the tough time is going through it at least with some level of peace of mind. Thirdly, you are forced to sell your assets prematurely. If you're sick or you are in a very tough position and you have an asset somewhere or an investment, you're going to be forced to sell that investment so that now you can have enough money to take care of your situation. And we know if you have land, even if it was prime property, we know selling an asset in this country can take long. And you never know that how exactly during that period you tend to sell if things are going well in the country. You'll have to sell your assets or any investment you have at a throwaway price because of the distress that comes in with needing money urgently and you don't have any liquidity. Think about it. Someone is in hospital. They need money fast. What happens? Even if you have all the most amazing assets, all the most amazing investments, you'll still have to liquidate them so that this person or your loved one or yourself can have enough money to go to hospital. You cannot go to the hospital receptionist or the counter and tell them, hey, I have my prime property there in Karen, can you give me a hospital bed? It doesn't work like that. The hospital needs the cash so that they can be able to take care of you. And imagine you have been building your investments for the last 10 years, the last 15 years, and then one situation makes you have to sell these assets at distress. Now that brings me to my fourth point. Having to sell everything or having to start from scratch just because you do not have insurance and you did not put this protection in place. You take so long, building wealth. For those of us who are in the wealth building journey, you understand how it can be a push and pull. It can be a lot of trial and error until you eventually get the rhythm. So say you've gotten the rhythm and you've been in this for the last 15 years. And then one very critical illness just ends up hitting you or someone it is that you really love. What will happen? Everything it is that you own, everything it is that you have, you will have to sell it at a distress, as I'd mentioned, with regards to your assets. And meaning that everything that you have worked so hard for will be wiped out by just one illness or one situation over work that has been done the last 15 years. So please, so important to protect that. And lastly, children are left being bounced maybe from one house to another, not knowing where exactly they are going to be permanently at or protected from because a parent is no longer there. There's nothing worse than that. This child is used to going to a certain school, used to a certain lifestyle. Now that the parent is not there and there's no money to take care of these children, sometimes they might feel as a burden to a lot of people. So today, the month of May, they're being taken care of by Auntie Elsa. Tomorrow, in the month of June, they have to be taken care of by Uncle David. So what happens to their psyche when they're being bounced from one house to another? It almost feels like they're not wanted. So it's very important to make sure that you have this life insurance in place so that your children or their lives are not disrupted at all, no matter what. Again, as I said, emergency fund, great place to start, but insurance is where the heavyweights are at. Yeah? It takes care of those unforeseen circumstances that can be too big for you to have to handle by yourself. It's very clear. Emergency funds are essential, yes, but they were never meant to carry and protect your legacy. That is where insurance comes in. Both very critical, but do very different things. One is short-term, one is long-term. One is meant to carry bigger risks that you might not be able to carry yourself, or you might not have the capacity to. Or it might just be smarter for you to put aside a smaller amount for even bigger protection through your insurance. And the best way of going about it now is to now build your protection portfolio. If you've already started with your emergency fund, that is great. Please continue building it to the level that you are comfortable with, whether it's 6 months worth of your monthly expenses or even a year worth of your monthly expenses. Now that you've built your emergency fund, it's now good to go to the next level. You're looking now into your medical insurance, into your life insurance. If you need any of those services, we are here for you. Please go to the links in the description box below and say, I want medical cover, yeah? I want life insurance. I want an emergency fund. Everything is down there, and my team, our team at Risque Africa, will get back to you and help you build a full, solid protection portfolio. Secondly, we have a protection workbook during this protection era campaign, which can guide you in the different protection tools that are necessary for you in your life now, right? It will be good for you to see, this is what it is that I need. And this is what it is that I'm missing, especially if you do the protection quiz, the protection era quiz, you'll be able to see the gaps. And with the protection workbook, you'll be able to see how can I be able to fill in this gap. And if it's still not clear, that is where it is we can come in. You can just get in touch with us. Be like, I want to build a whole protection plan. I want to build my protection wall, but I don't know how to go about it from where it is that I am. That is what we're here for. And remember this, peace does not mean absence of chaos, right? It just means that you are protected when this chaos come in. It means that you do not have to interrupt your life when these unforeseen circumstances happen. So we are really looking forward to you, or for us, walking you down this protection journey during this protector era, so that you are okay no matter what happens and whatever life throws your way, and you'll continue having your uninterrupted moments, your uninterrupted joy, and your uninterrupted laughter for both you and your family.